How to invest your first $10,000, Warren Buffett's greatest advice. Have you recently discovered that you have $10,000 in your pocket? While this may not appear to be a life-changing sum of money, if invested properly over time, it has the potential to grow into a very nice nest egg. So, let's talk about the best way to invest $10,000, whether from a windfall, an inheritance, or winning a lottery ticket. Watch this video until the end and remember to subscribe for more such uploads. Here we begin. So firstly, let's hear what Warren Buffett says. Warren Buffett is frequently asked for investment advice as one of the world's most successful investors. At 91, the Berkshire Hathaway CEO has a net worth of more than $100 billion and is sought after for investment and financial advice. This was also true in 1999 when his net worth was a whopping $30 million. Warren Buffett was asked how he made $30 million at the Berkshire Hathaway annual shareholders meeting in 1999. His words of wisdom? Begin early. According to CNBC, Buffett said, "Start early. I started making this small snowball at the top of a long hill. The trick to having a long hill is to either start young or live to be very old." Warren Buffett stated that if he had $10,000 to invest, he would most likely put it into smaller companies in order to invest strategically. "I'd probably focus on smaller companies because I'd be working with smaller sums, and there's a higher chance of something being overlooked in that arena." Buffett said that investors should trust their instincts when selecting a company to invest in and act vigorously when they find a good investment opportunity. The Berkshire Hathaway CEO has on numerous occasions emphasized the importance of investing in good business and index funds. When asked about investing to combat inflation, he once said, "The best investment, I think, is a good business. If you own a good business, you are very likely to keep your purchasing power regardless of what happens to the currency. Investing in ETFs or mutual funds is profitable. Mutual funds or exchange-traded funds facilitate investing, and the best funds have low fees. These pooled investment vehicles own portfolios of stocks or bonds and seek to achieve specific objectives. Investing in a specific market sector, generating cash flow, tracking the price of a commodity such as gold, or emulating the performance of a market index such as the S&P 500 are all examples. Ordinary investors can purchase shares in any number of funds. When you invest, the management team of each fund is in charge of keeping the portfolio on track. In exchange for this convenience, funds charge an annual expense ratio, which is expressed as a percentage of your total investment. Mutual funds and ETFs can be purchased through a brokerage account or an IRA. Vanguard is widely regarded as a market leader in both types of funds. Buffett believes in holding forever. Buffett has been quoted as saying that his favorite holding period is forever, despite the fact that no one can hold a stock forever. He really means that the best companies will be able to increase their value in the foreseeable future. Buffett, for example, first purchased Geico stock when he was 20 years old in 1951. Berkshire eventually bought the entire company and still has it in its insurance portfolio after 72 years. He also purchased Coca-Cola stock in 1988, months after Black Monday. Berkshire has also retained ownership of its Coke shares for the past 34 years. But neither of these two is the Buffett holding you should be aware of right now. Invest in an index fund. You can invest in places other than retirement accounts. A brokerage account, unlike an IRA, has no contribution limit. Consider it similar to a saving account, but with the options to invest instead of just collecting interest. If you have $10,000, opening a brokerage account may be the best way to go, either with the entire $10,000 or with what's left over after you have started an emergency fund, paid off debt, and/or maximize an annual retirement account contribution. The question now is where to put that money. An index fund can be a great, relatively stable place to start, especially if you want to make money without requiring regular active management. Vanguard, for example, provides a variety of low-cost index funds for investors looking to passively capture the performance of a market or industry. Options include bond funds and stock funds. If you plan to invest for the long term and don't want to babysit your money, an index fund in a brokerage account is worth considering. Build your emergency savings fund. Simply put, If you don't already have an emergency fund, that's the first step you should take in your investing journey. It is essential to have cash on hand in case of emergency. Even putting a portion of your $10,000 in a savings account is a good place to start on your investment journey. Given the low savings rates in general, this may not excite you. However, keeping cash on hand is still a good investment. Your return on investment comes from avoiding high interest rate payments if it means avoiding taking out a loan in a time of need. Bonds are a good investment. Bonds could be a good investment for $10,000 if you want to generate income. When you buy bonds, you effectively lend money to a company or the government. You agree to hold the bond for a set period of time, after which the bond issuer will return your money. In the meantime, the issuer pays you interest at a fixed rate on a regular basis. Remember that it is possible to lose money when investing in bonds. If you want to sell your bond before the end of its term, you may be able to find a buyer in the secondary market, but depending on market conditions, you may have to accept a lower price than you paid. Furthermore, if the bond issuer runs into financial difficulties, they may miss payments or even fail to return your principal investment. Bonds with higher interest rates, known as junk bonds, are riskier. Any investment always has a trade-off between higher risks and higher rewards. Bonds can be purchased through most brokerage platforms. What do you think about investing your first $10,000 US? Let us know in the comments below and subscribe for more.